Right now, the oscillator is tanking, but the price is actually moving sideways. Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading. Today, market is down about 1%. There, on the S&P 0.8%, semiconductor 0.7%, Dow 1.2%, Russell 2000, transport, banks, biotech, healthcare, utilities, retail, emerging market. These guys are all red today. Looks like though, energy is 1.7% positive, home builders green. Bitcoin down, gold, silver, miners are up a little bit, dollar up, oil up, treasure bond down, VIX popped about 7%. There, let's stay with S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed yesterday, and yet another down gap this morning. These down gaps are not making, so bears are trying really hard because bears do not want to see a follow through for the bulls, and these down gaps pretty much is exhausting the buyers here. So you can see what happened was with the down gap this morning, buyers kind of went for it right here. You can see on that first hour, at least the buyers were able to fill that down gap. It's much worse if the down gap was opened or sustained and remained untouched, but at least that down gap is closed. But a lot of times when the gap is closed, it's gonna act as resist. You can see we're not able to get above these down gap levels here. And quickly, it's sold off on that first hour. And trying to find the support on that short-term moving average on the second hour, we were able to get above the micro-term, but once we lost the micro-term, the fifth hour and the sixth hour, on the fifth hour, as you can see, that micro-term is starting to curl down, and that upper wick is telling us quickly that level is now acting as resistance. And now we're actually, for the first time since earlier this week, we're slightly back below micro-term and the short-term moving average. And this could potentially be a problem for the bulls. If they can't maintain this momentum going, inevitably you will see bears coming down and make threats here to fill this island gap. Remember, bulls really don't have much to work with. So if they can't get this island gap to be sustained, it's a matter of time that not only bears going to fill this gap, and they're going to come down and fill this gap, and there will be new lows. Put in for the month of October. So the objective is pretty clear at this point. Should there be continuation to the downside, this is a pivot, right? Prior resistance acted as support yesterday, and we come down to about 370. Bulls want to make sure that sellers do not fill that gap, this green box here, and make sure that you protect it if you do not want to see any sort of dismantling action, right? Whatever the bulls have built here this week, bears can dismantle all of that very quickly if these levels are, does not hold. Let's check out that oscillator. So as you can see, right here, last time when we did see that oscillator hitting that overbought level, that oscillator tanked and price tanked with it. And this is only hope for the buyers, that buyers are possibly correcting through time, letting that oscillator reset, keeping that price sideways. Remember, they have to protect 370 potentially before they make a move, and getting that oscillator, you know what I'm saying, cross back up. Bears, if you're a seller here, you're looking for much lower prices. You got to make sure that oscillator do not cross anytime soon here. You want to make sure that oscillator gets all the way to the bottom of it. So we're talking right here. And then you can get your lower highs and lower lows going. However, if we do see a cross And if buyers start getting there, because remember, we got these slight higher highs here, and if this is going to be that higher low, buyers must break above that recent high at 378.50. I'm going to come back for you. We'll reassess the situation. Enjoy your evening. We'll try tomorrow.
Hey, so what do you need besides a miracle?
Guns. Lots of guns.
Neo. No one has ever done anything like this.
That's why it's going to work.